I made more changes than I would like this quarter, but my portfolio is taking shape and not far away from being where I want it to be. Hi everyone. Now for those who have been following my channel along, you'll know that I don't want to put a course together. I think there are enough courses in the world and I think there are plenty of books out there as well. But I've actually come across a course that is pretty much ideal. Exactly the type of course that if I was to do a course, I would aim for something like this. Now that I know that this course exists and it is far better than anything that I would put together, I want to highly recommend it to you. The course has been put together by Hamish. He is also an Australian and he looks at companies in a very similar style to me. The analysis he does is fantastic. Now Hamish was kind enough to provide a discount code for me and anyone else that I know that would like to join the course. The 30% off code that you need to enter at the checkout is BROWN. Again, this is not my course, it is actually Hamish's. So he will answer your questions after you join, which he said he is active there all the time to help answer questions and concerns you have along the way. Now the course is called Learn by Example and it is a platform and private community that is not exactly for absolute beginners, but for those who want to dramatically improve their basic understanding of value investing. So Hamish takes you through lots of real company examples, which I think is the best way to learn. It's like the Columbia Business School approach, but like 1,000,000 times more affordable than a university degree. Now I do a lot of high-level quick analyses here on my channel. Well, this course by Hamish takes you to the next level into a more important, deep analysis. The rest of the information is in the link in the description of this video. Go and check that out. I'm excited to get through all of the content in this course myself. And Hamish is a good guy and I wouldn't recommend this if I didn't think it was any good. Now for today's video, I'm going through my quarterly update on my portfolio, just like I did after Q2. And I can preface this video by saying I made more changes than I would like this quarter, but my portfolio is taking shape and not far away from being where I want it to be. Okay, so let me draw your attention to the first 5 companies. So we got Alphabet, Facebook, Middleby, Global Cord Blood Corporation, and Diamond S Shipping, because these are the ones that I sold in the quarter. Now, let me try to explain why. Alphabet and Facebook, they were getting close to what I think fair value is. Now, these were the ones I really were hesitant to sell, but look, they were already a very small piece of my portfolio anyway. And I've essentially just moved that money into my new positions, which I'll get to a little bit later. I just wanted some more cash for those because the new positions I was opening up quite big positions in. So look, Alphabet and Facebook, I think we're going to get market returns for those for the future. Facebook maybe a little bit more so, but all the valuations that I was trying to do for these companies, I can't see myself getting in the 20% range. I don't see that possibility. Whereas for the new companies that I invested, I do see that possibility. So that was the reason. That might backfire on me, time will tell. I really do like Alphabet and Facebook as companies though, so it was pretty tough for me to sell these. And it looks like I have cut my flowers to water my weeds here, as Peter Lynch would say. I hope that's not what's going to happen, but I think I have thought about this logically and I've tried to reallocate my money into the best way possible. And anyway, that's what I was doing here with these sales. Middleby has definitely reached my valuation. That just happened a lot quicker. Look, it's gone up over 200%, 234% since I bought it a little over a year ago. And look, that's a massive return. It just got there a lot quicker than I was expecting. And it's at fair value now and I'm happy to sell from that. Again, it's not the best company. It was just so cheap when I was buying it that I couldn't refuse. And as you can see, it was a fantastic return. So if I can find more Middleby's, great. I don't think it's a long-term compounder, hence why I sold it. Global Cord Blood Corporation. Now, again, I've had a really good return on this, but I actually had a little bit of an issue with the management team here on this one. I think it is still severely undervalued based on the financials, but I lost a little bit of trust in the management team. I listened to the last 2 quarterly earnings reports that they gave out. And just the management team were very wishy-washy. I don't know whether everyone understands what that means, but they were a bit wishy-washy in what they were talking about for the future and what how the business was going to grow. And they don't really have a whole lot of, the management team aren't super aligned with the shareholders. And it just made me, I was just getting a little bit concerned about the company. And I just thought, you know what? I have better investment opportunities. I'm happy to sell this one. It's probably my least conviction idea out of all of them. Look, it might go up to $15, which I think is probably closer to what it's worth. Maybe $20, but look, I'm happy to see the risks, understand the risks that were involved there and move on from that one. And Diamond S Shipping was actually sold to INSW, International Seaways, and I don't understand International Seaways as a business, so I sold out of those to reassess that further. But I've already got enough exposure to the oil tankers anyway, so I was happy to just take that bit of profit there and move on. Like I said, I've got a pretty big oil tanker play going on already. It didn't really matter whether I had another oil tanker company. So there were the reasons for the sales. Okay, now let's get into the first new buy, and that is Alibaba, and I don't think this is going to surprise anyone here. So these are the reasons why I invested. Look, the company is growing strongly. I know the share price isn't growing strongly, but the company itself is. I think there's lots more room to grow, even though it is a large cap company. The financials are very good. Their balance sheet is fantastic. And I thought the valuation back at $200 was pretty good buying. So at 140 is very, very good. So many super investors are invested in this as well, which gives me a lot more conviction. I think the current sentiment is just a short-term thing. Look, let's see where this is in 5 years. The market hopefully will weigh this stock correctly. And I even have more put options at strike prices at $145, which are looking likely to be hit as well. So I'll probably have even a bigger position here pretty soon. The next thing I looked at was the destination of Alibaba, and I think they're going to be the largest e-commerce provider in China. I think they've got continued growth easily to $2 trillion. And as Manish Babrai would say, they're an apex spawner with cloud driving a lot of that future growth potential. Alibaba being such a massive company with all these different things going on, I think there's just a lot of ways that we can win here and be right, and Alibaba can generate value for their shareholders. So I'm pretty happy with this investment. And the second buy for the quarter was Naspers, and this probably doesn't surprise anyone as well. And here are the reasons why I invested. Tencent is an amazing asset that they own, and I'm getting Tencent for an almost 50% discount, and I think Tencent is already undervalued. So I think there's just a lot of free upside here. Naspers management are aligned with Naspers shareholders, hence why I chose it over Prosus and directly buying into Tencent as well. I just think we're getting a massive discount. Essentially, I want to own Tencent, and I think Naspers is still a really good company, and that's just just a better opportunity to buy Tencent. I know it's indirectly. I know there's going to be a discount for the extra layer of management there, but look, it means I get all the Naspers extra stuff as well for pretty much free, plus the discount. It seems like a no-brainer. Now, the destination, I think, for Naspers looks a little like this. I think they've got continued growth going at that 15-20% per annum. Then on top of that, I think that discount to the net asset value is going to reduce. I also think they're going to do more spin-offs of some of their successful companies that they have. And Tencent to be potentially a $3 trillion company, which brings Naspers to a $500 billion company just with its 10-cent stake, excluding all the other stuff as well. So I feel like the upside is pretty good here. Now I'm down about 15% from last quarter, so that's a pretty decent pullback, but like I've said before, judge me on a 5-year time frame rather than quarter by quarter. So this is also how my portfolio sits at the moment. Now, as you can see, there's a few negative total returns so far. We've got Shinnikin's down a little bit, Nintendo's down quite a lot, Alibaba's down a lot more, Naspers is down a little bit as well, and the rest are, they've been doing okay, but they haven't really pulled back as much. It's really those new buys of Alibaba and Naspers. Nintendo's down a lot. Everything else is, going along okay. I'm not really worried about any of this, I'll be honest. I'm actually really happy with how this portfolio is coming together. Now, at the bottom, you see it says my total returns, including cash, since January 2020. That's when I've started tracking everything. Before that, my numbers were a bit messy, and I hadn't really kept good records, but from January 2020, I was able to, so that's pre-pandemic, which was pretty cool because, look, I could have started this in like May or something, May of 2020, and my performance would be very impressive. I think I worked out it'd be like, 60 or 70%, but that's not, I feel like, a good representation. So I thought I'd go back from January 2020 it went down first and then back up kind of thing. So Anyway, the comparison to the S&P, I'm actually not beating the index at the moment. So I would have done better just having my money in VOO or IVV, which is the ETFs, and I would be better off than I am right now. But I think I'm going to be far superior over a longer period of time, which we'll just have to wait and see. Now, I'm able to invest in these companies because I use Interactive Brokers. It is the best by far, and I'll have a video soon comparing the brokerage accounts in the world against each other, but more spoiler alert, Interactive Brokers is the best. Now, if you use the link in the description below to open an account or even just try it and go for like a demo account to take a look around how it all works and get more familiar, because a good brokerage account is critical to my investing strategy because I invest all over the world, and I think you should be open to that idea as well. Okay, so this looked quite different to my previous quarter because that cash pile has reduced quite significantly. It was pushing 30% last quarter, and I've used a lot of that cash now to invest into Alibaba and Naspers. Plus I've sold out of Google, Facebook, some of that other stuff, and plowed a lot of that into Alibaba and Naspers as well. So Alibaba making up the biggest part of my portfolio now, and that's probably going to get bigger because of my put options that I have that look like they're going to get hit. Shinikin still makes up a big chunk, Redbubble, and the oil tankers. Now, the oil tankers I'm probably going to hold until 2023. That's sort of my time frame that I'm giving that thesis to play out. Go back and check out my videos if you want to know why I'm invested in oil tankers. That seems a bit odd, looks a bit odd compared to these other companies and these other businesses, but there is a thesis there. Now, I think that the core rocks of my portfolio are Markel, Berkshire Hathaway, Nintendo, Skyworks, and I now think Alibaba. I think they're going to make up, they're going to be my long term. They're my big companies. I'm going to hold them for long periods of time. That's the plan anyway, unless something dramatic happens or something changes. But that's sort of the plan. I feel like that's the Guy Spear approach, where I can have them in and sleep well regardless of what happens in the market. And then I hope Naspers, Shinikin, Redbubble, Dropbox, and over-the-counter markets, OTCM, I hope they sort of become those mature companies over time as well. So that's sort of the plan. That's how it looks like. That's how my portfolio looks now. I would like to probably I'm looking to add more to Nintendo and maybe add one or two more companies if they get to the prices that I want. But yeah, my cash is only at 12% now, so I don't have a whole lot of room to work with. We'll just have to see what happens, I guess. Okay, so let me summarize everything. I've had 2 new buys and a handful of sells. Now, I'm happy with the Alibaba and Naspers companies. I have been tracking them for more than a year now, and they finally got to a price I was willing to pay. Now, obviously, in hindsight, I wish I bought them cheaper, but I had no idea that that was going to happen. I stuck to my prices that I was willing to pay, and I bought them when it hit those prices. I don't think I'll care in 5 years' time. Now, selling my Facebook and Google shares to buy Alibaba and Naspers is something that will be fascinating for me to see develop into the future and see which one was the better idea. Now, with my cash position, like I mentioned a little earlier, I'm getting pretty close to deploying the rest of this position. There are a handful of companies that are not too far away from buy prices. We've got Nintendo, Naked Wines, and potentially VIP Shop. They're all getting pretty close. Plus, Kelly Partners Group isn't that far away either. Now, I plan to update this every quarter so you can follow along and see how well I perform. I hope this was something you enjoyed looking at and seeing exactly what is going on. Now, don't forget about Hamish's course and my discount code if you want it. And finally, I can take the criticism, so leave a comment about your thoughts, like or dislike the video, and I'll see you next time.